So this is Carrie. I'm going to be focusing on primarily 4 different private options. Continuing your COBRA and transitioning to HIPAA, purchasing an individual and family coverage plan, a small business group coverage, and possibly a short-term health insurance plan as an option. So the first option, continuing COBRA and then transitioning onto HIPAA. After the 65% subsidy ends, which we know for many will be starting in June, you can continue on COBRA by paying 100% of those premiums. Now this option is really ideal for those who may not qualify for an individual and family plan, and I'll discuss that option next. So if you stay on COBRA until it's exhausted, then you'll be HIPAA eligible, and the HIPAA law guarantees you access to health insurance. And it's important to know that you must remain current on your premiums to keep your COBRA plan. In most cases, there's not a grace period for being late, and you don't want to risk losing your coverage. After you've made your last payment on COBRA, you'll receive a certificate of credible coverage. And that certificate will show you that you've had 18 months of prior coverage without a gap. And it's important to keep that certificate because you may need to provide that to a carrier for HIPAA eligible, to show that you're HIPAA eligible. And then once COBRA ends, it's important to get covered on a HIPAA-eligible plan before you have more than a 63-day gap in coverage. After that, you'll no longer be eligible. Some of the advantages and disadvantages to this. The advantages to this option would be if you're in the middle of treatment like cancer or if you're pregnant, this option allows you valuable access to coverage and the plans are guaranteed issue. Some of the disadvantages are that although COBRA is typically the most robust coverage available, they've got low deductibles, high coverage amounts, the monthly premiums are typically extremely expensive, and the same is true for HIPAA plans. And HIPAA does not regulate the premiums charged by state licensed insured, so that kind of contributes to it being expensive. The other thing is you'll have limited choices of plans and coverage, so it's not like getting an individual and family plan where you might see 80 choices. The HIPAA plans are very limited to what you have, what there is to offer. If you have any doubt about qualifying for a HIPAA plan, talk to a licensed agent. The next option is getting an individual and family plan. There are hundreds of affordable health insurance plans available on the private market, and these plans are medically underwritten. You have to complete an application to apply. If you're reasonably healthy and under the age of 65, your chances of being approved for coverage are greater. And if you have pre-existing medical conditions like cancer, diabetes, or heart disease, it may be more difficult to get approved. But don't assume if you have a pre-existing condition, you'll automatically get declined. Every state and carrier is a little bit different. You still may be eligible. Some of the advantages and disadvantages, prices are fixed by law, so you can shop for insurance anywhere and always find the same price for the same plan. Most consumers are really surprised when they see how affordable an individual plan can be. Plans are month to month, so you can cancel them at any time or stay enrolled as long as you wish. Some of the disadvantages, be aware that the plan benefits may be different than traditional group plans. It's important to understand what benefits you want in your plan and what you can do without, like maternity. If that's not an option for you at this point, then don't pay for a plan that has that. For now, you can be declined based on your medical history. That'll be changing in 2014 with health reform. Because there's a lot of options, it's a good idea to talk to a licensed agent, and this is more important if you have a medical condition. The other thing is look for a plan. If you really like your doctor, make sure he accepts the plan that you want to buy. Another thing, consider an HSA, which is a health savings account. You can put the extra money that you would have spent on premiums into a tax-advantaged savings account and spend it only when you need it. So not like a flexible spending account. You don't lose it at the end of the year. Some of the things that's changing with health reform, we're getting a lot of questions about how health reform will impact the individual and family market, and here's what's changing this year. Your insurance policy can't be rescinded or canceled because you get sick. Insurance companies can no longer put limits or caps on the amount of money they spend on your medical care. And you can add a child with a pre-existing condition to your plan beginning in the fall without medical underwriting. And then policies will be required to cover the cost of preventative care at no out-of-pocket cost to the policyholder. And then what's staying the same is adults still need to go through medical underwriting for insurance in this market, so it's not for everyone. That's not changing until 2014. And then reasonably healthy people can find affordable coverage in this market and take advantage of the individual market reforms. This slide just shows an example of what average premiums are. So the average premium for an individual plan is about $161 a month. The average family plan is about $383 or $388. I recently helped a customer that didn't have insurance because he was going to college and didn't qualify to stay on his parents' plan because he was over that age limit. And he was really on a tight budget but wanted coverage in case something major happened. And I was able to find him a plan for $60 a month, which included doctor visits at a copay and an out-of-pocket maximum he could afford if he ended up in the hospital. So it's always a good idea to see what's available and don't assume you don't have any options that are affordable. The third option is getting a small business group plan. So many people who've lost their jobs may be doing some part-time consulting work or running a small business. So starting this year, health reform provides a tax credit up to 35% of the money qualifying business spends on health insurance premiums. So if you have a pre-existing condition, you may not qualify for an individual and family plan. You should look into seeing if you qualify for a small business plan because it's group coverage and therefore guaranteed issue. Find out how many people are required to qualify for a small business coverage in your state, and in some states it's as low as 1 or 2 people. In addition, a business with fewer than 10 employees who earn an average wage of less than $25,000 per year qualify for the full benefit of the tax credit. Some of the advantages and disadvantages, obviously, so one of the great advantages is the tax credit I discussed at the 35%. With any group coverage, you can't be declined due to a pre-existing condition, and group coverage tends to have richer benefits without waiting periods. The premiums are generally higher, so that's a disadvantage, and the costs are based on the group's overall health. So let's say you have a husband and wife that are older with pre-existing conditions, and then you have one healthy younger employee. That person is sharing the cost of the two less healthy. And we get asked if your spouse can be an employee. In some cases, the second person can be a spouse, provided they meet certain qualifications for employees within the tax code. So talk to a tax professional before making any decision about adding a family member to a small business health plan. The last option is purchasing a short-term health insurance plan. These options are for a specific period of time, up to 6 to 12 months. Short-term coverage is best for people who know they have access to group coverage within a set period of time. So just like purchasing an individual and family plan with pre-existing medical conditions, you might find it more difficult to get coverage. Some of the advantages are that if you're approved with a coverage, it may begin the day after you submit your application. These plans can be less expensive because they're limited to 6 to 12 months and they have limited benefits. So if you're looking for a plan that you want first dollar coverage, short-term plans generally don't give you that. For example, of a first dollar coverage would be a doctor visit at a copay or a prescription drug. So everything would be subject to your deductible instead of having a copay. And then long-term illnesses are not covered. If you develop a long-term illness like cancer, the insurance company does not have to renew your short-term policy, and now it'll be difficult to get an individual plan for if you need it for a longer time. The other thing is it's not does not count towards continuous group coverage to make it so that you're HIPAA eligible. You can cancel short-term insurance or individual family coverage at any time without a penalty, so don't get short-term because you think that you're making a smarter short-term commitment. And this page just has a little bit of some resources for some information.